At the outset, let me thank each one of you being today here on GST Conclave, and that too on an important topic, effective changes which is happening in CGST, IGST, UTGST, SGST law, and that is effective from 1st of February 2019. We are doing this program just a day before, and these changes are very, very important. I will run through it in my theme presentation. Technical presentation would be done by all the learned speakers from the dais. So what I'm going to present before you, that what all effective changes. There are almost, if you see, around 46 changes happening in GST law. We all know GST got introduced on 1st July 2017. And very first time this change is happening in the Act by way of Amendment Act 2018, which got published in Official Gazette on 30th August 2018. But changes are effective only from 1st February. And you have seen yesterday, 13 notification is being out in the market, talking about all these changes effective from 1st of February. How these changes are going to impact GST and our way of operation, I will try to draw those pointers for you, and technically we will discuss all these points in the technical deliberation. So let me start with the first and foremost point where we see the change. So I will run through the important changes, and these changes are just bullet point for our digest. And later in technical presentation, we will discuss all if and buts of those changes. So maybe the first are quick snapshot, starting with the very first change, service definition. An explanation got inserted in service definition, and it says any facilitation or kind of activity done for trading in securities that is chargeable to GST, and that to a supply of service. Security per se, neither a goods nor services, but any transaction which is facilitating or arranging trading in securities chargeable to GST. So maybe any processing charge which is being taken for trading in securities, that is chargeable to GST. But otherwise, trading in securities per se, not chargeable to GST, because securities are neither goods nor services. First. Second, we all know that the taxable event in GST is supply. We have seen the term manufacture history. If you go back to section 2, subsection F, Central Excise Act 1944, term manufacture as on date, we are getting lot of if and buts, and even we get lot of judgment from the apex court, Supreme Court, whether activity undertaken is a manufacture or not. So now this supply, which is the taxable event, I'm of the view, even this term supply is so subjective. If you have seen the definition of supply, an inclusive definition. So how the term supply is being defined? Supply includes, without defining what is supply, and then includes all forms of supply of goods or services or both, and thereafter continue such as sell, transfer, barter, exchange, licensing, leasing, renting, disposal. 8 terms are used as exemplary terms. But irony is, none of the term is defined in GST law. So what is exchange? What is barter? I was expecting that at least this term supply should not have same fate as we are facing today on term manufacture. But that is what the irony, but what all changes is being done and effective from 1st of February 2019 in the definition of term supply, the first and foremost change. Schedule 2, which is determining a transaction can either be supply of goods or supply of services, is being delinked from the supply definition. Meaning thereby, Schedule 2 will not have any reference to term supply. It is only going to be, and for the purpose of determining transaction undertaken is a supply of goods or supply of services, first. Second change. The 3 important transactions are being included in Schedule 3. And Schedule 3 is neither a supply of goods nor supply of services. What are those 3 transactions? One is called merchant trading. And what is merchant trading? Let's say you are registered in India and you got some customer in US. They wanted to have some supply of goods. So you have option, either you can supply from India to US or you can identify some vendor outside India. Let's say you got some vendor in China and who is supplying directly from China to US on your account. Revenue will come to your PL account credit side, but that will not be chargeable to GST, included in Schedule 3, neither a supply of goods nor supply of services. Second transaction, high seas sale. Let's say I've imported goods at $100. When my goods is on high seas, I'm selling the same goods to someone at $150. So revenue will come to the extent of $150, but no GST leviable, included in Schedule 3. Third, inbound sale. What is inbound sale? I have imported the goods and warehouse in custom bonded warehouse, inbound. I have filed bill of entry for inbound. When my goods are warehoused, I am selling the same goods to some customer in India at $150. Revenue will come to my PL account, and that ultimate customer going to file bill of entry for ex-bond home consumption. So in my hand, that is not chargeable to GST, no supply, Schedule 3 transaction. These changes are effective from 1st of February 2019, but I'm of the view these are clarificatory in nature. Should be applicable retrospectively from 1st July 2017. So your 3 transactions, no supply. What happened? Do you have any implication for reversal of credit on input and input services pertaining to these 3 transactions? The fortunate part is you need not require to reverse. So what happened? These transactions not chargeable to GST and corresponding reversal of ITC not required. Coming to the third component of supply definition. Schedule 1 having specific 4 entries, even though without consideration, GST leviable. So there is a change in entry 4. Entry 4 of Schedule 1 says, import of services by a taxable person earlier, erstwhile, pre-amendment. This taxable word got deleted. So now by a person, from related person, or any other establishment outside India, but that should be in the course of furtherance of business, even though without consideration, GST leviable. So what is the effect? If you are a person not registered in India for any reason because you are engaged in exempted goods and exempted services, not taken registration. But if you are importing services from related person or any other establishment outside India, and that is related in the course of furtherance of business, GST leviable, even though you are importing without consideration. These 3 changes I have highlighted for you in the supply definition. what I was looking into, what I wanted from the Government of India. See, supply, as I said, this term is subjective and inclusive definition. We are struggling with one important entry 2 of Schedule 1, supply of service among distinct persons. Just imagine you're having head office in Delhi and you're having 4 branches in different states. You may have taken 5 registration because all 5 units are distinct person for you. But are you raising any invoice towards cross-charge, supply of services? Because HO, your CMD, your CEO, your common IT team, HR team, accounts team sitting at HO, and they're also looking after operation of 4 other branches called distinct person. Are you really raising any invoice as supply of service, which is there as per entry 2? Entry 2 of Schedule 1 clearly says supply of goods or services between related person or distinct person, even though without consideration. In the course of furtherance of business, GST leviable, and this transaction is burning as on date. There is a specific rule in CGST valuation rule categorically says that government can issue a notification and specify a class of taxable person to treat this value as a nil so that no GST leviable, but until now no such notification is being issued. And what happened if you're engaged in exempted healthcare, education? So what happened? This cross-charge, GST leviable, but ultimate credit is not available in the recipient hand, being your outward is exempted. So this is burning issue. I wanted to see this burning issue could have been resolved, but still we have to carry on. And this is the point which will have multiple way to look at. Term supply. Coming to the next, reverse charge method. I know that 9 subsection 3 or section 5 subsection 3 of IGST Act specified goods and services falling under reverse charge method, wherein recipient has to discharge GST liability. So notification 4/2017 for specified goods, and then we got notification number 13/2017 for specified services falling under 9 subsection 3 of CGST Act continue to be reverse charge method. The warning point was section 9 subsection 4. What is section 9 subsection 4? It says if you are a registered recipient and if you have procured taxable goods or services from unregistered supplier, that was chargeable under reverse charge method. And one exemption was given to an amount not exceeding 5,000 rupees from any or all unregistered supplier. But from 13th October 2017, it is exempted and was continuing. As per the last information, it was supposed to be till 30th September 2019. But if you look at the notification issued yesterday, the relevant notification which was there for exemption got rescinded, meaning thereby this 9 subsection 4 is back on public domain. But the now question comes, do we require to pay reverse charge if we are procuring from unregistered person? My reading of the provision is, no, it is not applicable, even though the subjective notification got rescinded. Why not? Because the substituted 9 subsection 4 says reverse charge is applicable only for specified registered person and for specified goods and services. These person and goods and services are not notified as yet. So meaning thereby section 9 subsection 4, which is a debate and you must have seen in your WhatsApp group, whether WAC or not, to my reading, it is not applicable from 1st of February 2019 till the time they specify the registered person, or specified goods or services. Coming to the next, composition dealer. In composition dealer, what changes was made in CGST Amendment Act under Section 10? They have said if you are composition dealer, you can supply services. So if you're a trader of goods or manufacturer of goods enjoying composition dealer, you can also supply services for an amount 10% of your preceding year's turnover or 5 lakh, whichever is higher. Right? So this change is effective from 1st of February 2019, but now there are two changes which is being proposed in 32nd GST Council meeting. What is being proposed? That limit for composition dealer for goods going to increase from 1 crore to 1.5 crore, and there is one more big announcement for service sector. If you are engaged in service and you want to opt for composition dealer registration, they have allowed the same provided your threshold turnover in preceding financial year would be 50 lakh rupees. In that case, you have to pay GST at the rate of 6%, 3% CGST, 3% SGST, but these changes are going to take place only from 1st of April 2019, but corresponding changes required in the Act, which is not there as on date. So wait and watch. This was announced in 32nd GST Council meeting. Coming to Section 16, GST credit. Now, what are the changes made in GST credit? There are 2-3 important changes in GST credit. The first one, you have seen bill to SIP to in case of supply of goods. Are you aware of? Bill to SIP to in case of supply of goods. So what happened? One person directing vendor to supply goods to your customer directly. Same provision they have brought for supply of service. So what happened? This bill to SIP to model can be applied in case of supply of service. So what happened? You're not receiving services directly. Your customer is receiving. Can you avail credit? Similar like bill to SIP to, you can avail the credit whenever you are doing bill to SIP to in case of supply of service. Now coming to the block credit. Now block credit is being now, I will not say they have made certain good announcement, but of course some good announcement is there. What is that announcement is? Like we have seen under Section 17, subsection 5, block credit. So what are the block credit and credit is not available? First is motor vehicle. Having capacity not more than 13%, including driver. Credit is not available. So if you are purchasing a car, BMW for your director, can you take credit? No, unless it is being used for further supply, transportation of passengers, and for training purpose. They have also included vessel and aircraft. No credit. Unless it is being used for further supply, transportation of passengers, training, and transportation of goods. And then corresponding questions comes, which I used to get pan-India. On motor vehicle, credit was not available, but we used to ask whether credit available on repairs and insurance. Am I clear about it? And we used to say credit is not available on purchase. Why are you asking this question to avail credit on repair and insurance? Am I right? Now clarity provided. No credit on repair and insurance unless you are using such motor vehicle, vessel and aircraft for specified purposes. Only 2 other sectors are being provided credit, manufacturing sector and the insurance sector, if they are engaged into motor vehicle, vessel and aircraft. Next change, credit is not available on food and beverages, outdoor catering, cosmetic and plastic surgery, health insurance, life insurance, renting and hiring of motor vehicle, vessel and aircraft. No credit available unless It is inward supply for the outward supply or element of composite and mixed supply. So what happened? Your employer is providing you lunch and dinner free of cost. Lunch and dinner. And getting this lunch and dinner prepared by outdoor caterer, and he charging GST. Can you avail credit? The positive side of change H. Now this credit would be available to you. Even renting of motor vehicle, rent a cab, credit would be available. Only condition, it should be obligatory on employer under any law for the time being in force to provide to the employee concerned. So this is a laudable one. What best could have been done, which I was looking from PSD Chamber of Commerce perspective, like construction of factory and construction of building. It is utmost required in the course of furtherance of business. So if my contractor undertaking construction of factory and building, charging GST, no credit in my hand, and continues to be no credit. So this point is really boiling up, and against Make in India. Can we expect without factory to manufacture the goods? Can we expect without office to undertake services? But that is what the provision adds on date. Going forward, section 22 for registration. What is the change in registration? There are certain special category state. For them, limit is increased from 10 lakh to 20 lakh rupees. Otherwise, limit was 20 lakh threshold amount, 10 lakh for special category state. Now, for certain special category state, this limit is being increased, and this increased from 10 lakh to 20 lakh. And what all states are falling into? Assam, Arunachal Pradesh, Meghalaya, Sikkim, Himachal Pradesh, and Uttaranchal. So they are being excluded from special category state status. So they can enjoy 20 lakh rupees at par, but new announcement coming in 32nd GST Council meeting. This threshold of 20 lakh going to increase to for goods only. And that too effective from 1st April 2019, can happen only when there is an amendment in the Act. Act only talked about 20 lakh and 10 lakh. So this 10 lakh is increased by way of CGST Amendment Act. What happened for this 40 lakh and 1 week option window is being given to the other state for opting their threshold exemption amount. So this is the change. Next, coming to compulsory registration under section 24. Any e-commerce operator who is subject to TCS, tax collection at source, under section 52, they have to get compulsory registration, irrespective of any threshold amount. Coming to section 25, there are two changes in 25. The first change, let's say you are within the state of Delhi. You got one SEZ unit and you got another DTA unit. Compulsorily, you need to have separate registration. You can't take one registration. And second important change, and this is very good change, if you're having 4 units in one state, excise unit, just assume yourself. In pre-GST, we used to have 4 excise registration. But in GST, do we require 4 registration? Not required. Unless we have business vertical, different business vertical. Now this concept of business vertical is being done away with. Now they're saying if you're having different place of business, you can take separate registration within the same state. But that is your option. It's not compulsory. If you take separate registration, you become distinct person, then any transaction from A registered unit to B registered unit would be chargeable to GST. So before taking registration, kindly run through your business modus operandi, your business exigencies, whether registration required or not required. Section 29. Section 29 talks about cancellation. When you move your application for cancellation, anyone in this audience has applied for cancellation? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 12, 13. Okay, 20. When you apply for cancellation, it is not coming so smooth. Pending for a long, long time. The first question comes to our mind, what happened? I moved my application, but cancellation not approved. Am I supposed to comply with the provision of GST law, though I have moved my cancellation application? The good and fortune part, effective from 1st of February 2019, there would be temporary suspension under Section 29, subsection 1, under Section 29, subsection 2 of CGST Act, temporary suspension till the time officially it is being approved. So what happened? You are being relieved not to comply with the GST law till the time that suspension is on and your cancellation application is being approved by the concerned GST officials. Coming to Section 34, credit note, debit note. You have seen from 1st July 2017, whenever we used to issue credit note, it need to be linked per invoice wage. Am I right? And big challenge for all of us together. Can we issue credit note per invoice wage? Operationally not convenient at all. And we have faced the problem in the past. It was not conducive for all of us together. But now fortunate and good part is, the CGST Amendment Act says, now you can issue one credit note for multiple invoices. Credit note and debit note. But corresponding alarm to you. Section 15, subsection 3, which allows us to issue credit note for passing on discount or incentive post-supply. That provision still says that credit notes should be linked with the invoices. So one provision saying that one credit note, Section 34 says, you can issue credit note for multiple invoices, but the corresponding Section 15, subsection 3 does not have same change. So I do not know whether law is really getting changed, synergy is being created with the vision and objective, it is being changed. That is what Section 34 talking about credit note and debit note. Coming to Section 39. In GST, can you rectify your return? Can you rectify your return? Yes or no? What would be your answer if you are being permitted to rectify your return? You'd be happy? You'd be happy? Okay, they are talking about being happy days for us. And now they are talking about return can be rectified, but only when new return system getting into the system. And new return, they are talking about effective on test basis from 1st April 2019. Not sure how long it will take, but at least provision got inserted for rectification of return. Let's see, but this change is not effective from 1st of February 2019. So what you will do in case you have made mistake? By way of amendment only. In subsequent month return, either GSTR 1 or GSTR 3B. And new return, they are talking about 43A, Section 43A, going to be placed once they are ready with the new return utility, and that is available to us. We all are talking to the Government of India and putting a request that this new utility should be made available as early as possible. And minimum 6 months time given to the trade for usage of this utility. We do not want to see the same fate as we have seen for GSTR 2 and 3. So we initially started with GSTR 1, getting auto-populated in 2A, then GSTR 2, getting reverted in auto-population in GSTR 1A for the supplier, and then GSTR 3. So 2 and 3 is being suspended from July 1, 2017. We are only continuing with GSTR 1 and 3B. What we are looking from the Government of India, we are looking that, okay, you're coming with a new written format. Don't come with a 10-pager and 20-pager. Come with a return with only 2-pager. Now, what is the return they are talking about? Let me give you some highlights of the new written format. Now, they are saying unidirectional. What's saying? Unidirectional, meaning thereby supplier going to upload the invoice. And on the basis of my invoice, recipient can accept, reject, or keep on hold. And once you accept, then credit would be available. And once you accept, my liability get crystallized. Unidirectional. So what happened? If I have not uploaded, they are talking about missing invoices. But only for T plus 2 month. T plus 2 month. I am of the view, when everything is going to be unidirectional, why can't we change the system? Let missing invoices to be uploaded by the recipient and gets concluded in September following the financial year. If it is pertaining to 17-18, it should be concluded by 30th September 2018 or date of filing annual return. Why T plus 2 months? Again going to create complications. Some longer time period in our hands to negotiate with the supplier and say, boss, you have not uploaded your invoice. Kindly do that. Some longer time period. And missing invoices, if not uploaded within the specified time period, reversal, and that too along with interest. So we need to have some synergy. And for that region, we are saying that at least we must be given 6 months time period for pilot project, and it should not be implemented before 1st October 2019. 6 months minimum required. Coming to section 49. Normally we got e-cash ledger and e-credit ledger, right? Whenever you want to pay liability, either you should have money in your e-cash ledger or e-credit ledger, but in respective head. IGST, CGST, SGST, UTGST, and compensation cess. Am I right? Can we use e-cash ledger if we have deposited in CGST for IGST payment? Problem. We are referring to the government of India and saying and putting a request, e-cash should be my common ledger. And I can utilize with any liability. How it is making difference to you? And you are also not acknowledging, even though I put my money in e-cash ledger, unless appropriated, you are not treating as payment. So why can't we have one common e-cash ledger, the first and foremost point? But what is the change in CGST Amendment Act? If you're having this e-credit ledger for IGST, CGST, SGST, UTGST, and compensation cess, now they are saying it will have some mechanism for order of utilization. It is not your wisdom now. They are saying you must first utilize your IGST credit. And IGST credit can be used in sequential manner, IGST, CGST, and SGST. Then you go to CGST credit ledger. Utilize the same for CGST and IGST. Then you touch base SGST. SGST and IGST. As we know that CGST and SGST should not be cross-utilized. Why government is looking for? Just to improve fund settlement between home, central and state. And we are put on task, order of utilization. Hope you got my point. Coming to section 54, refund. Now refund fortunate part is, now we export of goods and services and supply to SEZ unit or developer are zero rated. And whenever we talk about export, we have preconceived notion that your money must come back in convertible, and it is for export of services, not for export of goods. Money must come back in convertible for an exchange. Fortunate part. Now they have said even though money coming in INR, even though it is going to be treated as export, like Nepal and Bhutan, and sometimes RBI permits that you can receive the money in INR as against convertible for an exchange. So this is the good change. Second, unjust enrichment concept is being introduced whenever you supply goods or services to SEZ unit or developer. So if I'm a DTA supplying to SEZ unit or developer, it is export, but I must prove that my SEZ unit has neither taken credit nor they have taken any kind of refund, so that unjust enrichment is being proven. Am I clear to all of you? So having said section 54, coming to two draconian provision. I'm saying draconian. And this is against trade, industry, and commerce. The first and foremost, section 79. What is draconian, you know? If I'm having 5 units, I have taken my 5 registration. Let's say 1 unit in Delhi, 1 registration in Haryana. I'm asking one simple question to you. I'm having credit in my Delhi registration. Can I pass on this credit to my Haryana registered? Can I pass on? What happens if I push a condition and say, no, you got some liability in Haryana, I will collect from Delhi? Are you going to appreciate or what? Are you going to appreciate? Appreciate? Say you got some liability in Haryana and you're not paying that liability for some reason, for interpretation issue. Can you be enforced that this money is going to be collected from Delhi registration? But that is what the provision. I said draconian provision. When you are not allowing me to take this credit of A registered unit to B, how come you are being empowered to get liability settled from other distinct person? I'm saying draconian provision. This is not being discussed at length and provision applicable now from 1st of February 2019. Another provision, if supplier does not pay the taxes, can you make recipient jointly and severally liable? If supplier has not paid the taxes, can you make recipient jointly liable for that liability? It was not there, but now it is the part and parcel and going to be, as in when 43A going to be introduced. So look at good and simplicity, but I'm of the opinion these provisions are not really giving the sign of good and simple tax. Coming to the second draconian provision. Whenever we file appeal, we got commissioner appeal and we got tribunal. So whenever we talk about commissioner appeal, is a first appellate authority. Am I right? First appellate authority. When you are filing appeal before the first appellate authority, how you can file your appeal, you know? You must deposit your admitted tax liability. Admitted tax liability along with interest and penalty. What happened for the disputed tax? You must pre-deposit 10% of your disputed tax liability. 10%. Now capping is being provided. It is 25 crore in CGST Act, but taken together from SGST, it would be 50 crore for first appellate authority. Capping of 50 crore. I do not know whether you are really getting good message or bad message. I will communicate. If your appeal goes to second appellate authority, tribunal, you have to deposit all admitted liability. 10% already deposited as a pre-deposit of disputed tax. Now, additionally, 20% of disputed tax liability. So, totaling together, 30% of disputed tax liability. Capping is being provided. They are saying 50 crore from CGST, taking SGST together, 100 crore rupees. What we have seen in excise and service tax in pre-GST era, it was only 7.5% first appellate authority, followed by 10% got settled by lot of jurisprudence, legal judgment coming in, only 2.5%, totaling together 10% and a maximum of 10 crore rupees. Now this 10 crore capping which was there in excise and service tax, now it is going to be 50 crore for first and 100 crore for. So good or bad? Bad. You're listening first time or you heard of? First time. And look at the irony. Whenever we try to educate the trade members, these changes are coming in. Trade members never wake up at the time need to be. They wake up only when it falls back on their head. And that's what. See, we are taking so much of pain doing this program. I have not seen even the government has done any program for these amendment happening from 1st of February. Neither the chamber nor the Apex other chamber has done any program. When we invite members, we see audience response sometime coming in a so polite manner. Okay, ho jayega. Nahi ho jayega, sir. We have to wake up at the right occasion. If you are not waking up at right occasion, this is going to create problem for all of us together. And that's what we have seen in GST, piecemeal changes. And these piecemeal changes are not giving certainty and stability we want to look at in GST law. Nevertheless, these are the two draconian provisions which I said need to be looked into. My request and humble submission. I'm making constructive criticism. I should not be taken as negative, but I'm making constructive suggestion to the Government of India. If at all we are looking GST as a good and simple tax, look at the positive side of it. Take taxpayers, trade industry all along. Treat them. I know there are certain dishonest. I'm not here for dishonest taxpayer. I'm here those who are honest taxpayer, and they must be rewarded. That is the point I'm making to the Government of India. Coming back to section 143, job work. You know, job work principal, registered principal can send input and capital goods to a job worker without payment of GST. And job work challan ITC 04. Am I right? That process need to be followed. Only condition therein that you must get back. Being principal, you must get back your input within a period of 1 year and capital goods within a period of 3 years. Then further time period extended. Now, Commissioner can extend the time period. For input, it can be further 1 year. And for capital goods, it would be further 2 years. So this is the good and laudable change. Good and laudable change effective from 1st of February 2019. But in ITC 04, I am in a trade and I used to get number of queries from the trade members. ITC 04, there was some problem. I was in Surat also, I got this query. I'm sending goods, principal is sending goods to a job worker, and job worker sending the same process material to multiple job worker, whether such transaction need to be captured in ITC 04. Now it is being done away with the recent changes. So you need not require to capture your subsequent sending of raw material to a job worker in ITC 04. So this is the relaxation you can see from job work perspective. Coming back to the important, which is hue and cry, section 140, subsection 1, transitional credit. Transitional credit of what? Simple provision says, if I'm having credit on the last date, the day immediately before appointed date, 1st July 2017, I can carry forward the same credit, provided I filed my Tran 1 and last date was 27 December 2017. Am I right? But the hue and cry was pertaining to what happened, Krishi Kalyan cess. What happened to Swachh Bharat cess? Credit is available, and a lot many taxpayer has taken credit and lot has not taken credit. Even though credit in US-12 provision available, but in GST, the government categorically said credit will not be available. And there was a change in the 140 subsection 1 by way of explanation. But they have hold this change for the time being. So holding this change, what is the meaning? We'll see later. But that is what the provision as on date. But what I was looking into, we have seen lot many companies, even for lot many companies, we have filed a writ in the High Court because we could not submit our Tran 1 on the last date, 27 December 2017, not because of my fault, because of system glitches. System glitches, I could not submit my Tran 1 and it is kept on hold, and we got circular issued on 3rd of April 2018 categorically saying there will be formation of IT grievance committee. You can approach to the nodal officer and your nodal officer will forward this case to GST and will check your login utility and check whether you tried on filing Tran 1 on 27 December 2017, and they will come back and then they will propose to the GST Council, and once approved, Commissioner can extend the date. It was 31st March 2019, but by way of order 31st January 2019, Tell me any one of you has got any letter from department struggling with Tran 1 that they have given yes to you, yes, you are having a legitimate case, you could not submit your Tran 1 and we have verified your back-end utility that you tried. Back-end your Loxy data, you tried on 27 December, you could not submit because of system glitches. We agree, we are extending your date. Kindly file your Tran 1, 31st January is the last date today, by way of order. Who got the letter? None. So who is acting on it? My request to the Government of India, they must look into this provision. And these provisions are important. And they must understand that only giving a date with no action will not work. So what happened? They have taken extended time period. Maybe you will get another order extending till 31st March 2019. But at least some communication must come from the nodal officer. Be it central, be it state, that yes, I have checked and verified your case. Your case is fit for submission of Tran 1 manually. Who is giving all this judgment? Only by Honorable High Court. And who is listening? None. So I'm only saying there should be some constructive way so that we can see the closure and satisfaction of transitional credit carry forward and could not be done just because of system glitches. Having said that, let me conclude my theme presentation. There is certain corresponding change in IGST as well. So IGST, export of services, now being permitted for INR receipt, wherever RBI permitting such receipt in INR as against convertible foreign exchange. So there are certain corresponding changes accordingly. So I have taken all the bullet point, given all the bullet point in my theme presentation. With this, allow me to say thank you to each one of you. Thank you very much.